Foreign buyers of U.S. real estate are pulling back as well. And it's not just high mortgage rates, but high home prices, low supply of homes for sale, and a strong dollar. And that's what's behind this sharp drop. So international buyers purchased roughly 84,600 homes from April of last year to March of this year. And that's the lowest number since the National Association of Realtors began tracking this. And it's a 14% drop from the year before. They bought fewer homes, but they paid more for those homes, with the median price of $396,400, also the highest the realtors ever recorded. All right, so who's buying? China, Mexico, Canada, India, and Colombia were the top 5 countries of origin for buyers of existing homes, and this does not count new construction. That's by number of homes and not dollar volume. Now, Chinese buyers had the highest average purchase price at $1.23 million, likely because a third of them bought in California, where home prices are highest. In total, 15% of foreign buyers bought homes worth more than $1 million. And where are they buying most? Well, Florida, California, and Texas, as well as North Carolina, Arizona, and Illinois. As for the how and why, not all foreign buyers used cash, but 42% of them did. And half of foreign buyers bought the properties for use as a vacation home, rental property, or both. And that's up from 44% the previous year. All right, so does this make it any easier for domestic buyers out there? Sadly, probably not. Overall, foreign buyers make up just over 2% of home sales. But in some of those popular foreign markets, guys, it could have maybe a small effect.
Paint us a picture of the overall affordability outlook at this point and where it leads us to think volumes are going to go at this point.
Well, affordability is still not great at all. And in fact, it's getting a little worse. We got the S&P Case-Shiller home price report this week as well. It's kind of backward looking, but it actually is showing prices gaining again for 3 straight months. They peaked last June. They came back in the fall, and they're very, very slightly down 0.2% year over year in April. But again, they're rising again. And the reason the builders are doing so well is not just because they're lowering home prices a little bit, which they are, but also they're buying down mortgage rates. So they're allowing people not to have that 6.5% or 7% rate. They're buying into the 5% range, which gives them that cushion for a year or two for the buyers getting into the market. And that was really huge for the builders in the fall and continues now. We're actually seeing builders do less of that because they're getting so much demand. They don't have to. But again, on the existing home side, remember, it's all that supply and demand crunch. When we say that we're really low supply, we are half the supply where we were in 2019 pre-pandemic. And even in 2019, we were below historical averages because we'd been underbuilding for so long. So it's going to take a long time for that supply situation to come back up. And until it does, prices are going to have a floor, no question. But, you know, I've talked to a lot of folks who are thinking about downsizing, and they're saying, you know what, maybe I'll keep the home if I don't need the equity to buy the next home, or even if I'm going to rent. The rental market, especially the single family, we're seeing apartment rents ease up quite a bit, but the single family rental market is so strong. And it's kind of this cyclical thing of if you can't buy a home, you have to rent a home because you can't afford to buy a home. So then the rents go up and it makes it even less affordable to rent the home, but it's still cheaper than buying the home, if that made any sense.
No, it does.
So yeah, people are saying, why not rent?
After cooling for much of last year, home prices are heating up again.
It's a couple of things. Consumers now getting used to a higher mortgage rate environment and an unusual drop in new listings right in the heart of the spring housing market. 30% fewer new listings came on in March compared with pre-pandemic norms, and this comes when demand is historically highest. Now, as a result, home prices rose a seasonally adjusted 0.45% in March from February, according to an early look at the Black Knight Home Price Index provided to us exclusively. After revisions to January and February reads, this is now the 3rd consecutive month of price increases. And while this is the national look, major markets in the West, where prices were the most overheated, are still coming down, but not as steeply as they had been. Prices overall had started dropping month to month early last year. That was when the average rate on the 30-year fixed mortgage rose sharply, more than doubling since the start of last year. Last June, prices were cooling at the fastest pace on record. Then rates peaked last October and started to come down at the start of this year, causing a major bump in home sales, but not nearly a big enough bump in supply. Why? Because the majority of current homeowners are paying extremely low mortgage rates and don't want to buy something else where they'll have to pay so much more on interest on their debt. This is especially true of baby boomers who would normally be downsizing now. But again, if prices just keep firming up and increasing again, it's just more trouble for the market.